I have to bring this up because I was just showing it at the top of the hour. 1 week euro dollar overnight volatility in euro dollar, Jeremy. Interesting. Second highest of the year going into a meeting. The highest was March. What does that tell us? Is there some tail risk here, as I was suggesting?
I think that's absolutely true. And indeed, last week, when we had the 1 week volatility rolling over to include the ECB meeting, that also spiked. Of course, that included the Italian referendum as well. But it's really just underlining the fact that although there is a relative widespread expectation that the ECB will extend that bond buying programme probably by another 6 months through 2017, there is the prospect that we are getting closer to some degree of tapering. And I think if it were not for the Italian vote last weekend, then I think the ECB will be talking about a degree of conditionality about the bond buying. So rather than saying we will buy 80 billion euros a month out until September, perhaps by moderating the language to say buying up to 80 billion. But I suspect because of the uncertainties in relation to Italy, that story has probably been pushed back into spring next year.
My favourite euro chart, I'm going to bring it up, Jeremy, it sort of tells us the story of QE. This is euro dollar, beginning of 2015, when Draghi announced QE. He implemented in March 2015, so on and so forth. Look at the circle there. That was December last year, December the 3rd. You know what happened. Leading up to that meeting, there was an expectation, the ECB was going to go big. It didn't. It under-delivered. The euro rose by 3%, biggest rise since 2009. How important is it that Draghi manages expectations? I mean, is there any possibility we see a repeat of that?
Well, there is, because, of course, whilst the meeting tomorrow sees both updated staff economic forecast, rolling out the forecast profile to 2019, and we also get the review of the bond buying programme, it may be the case that the ECB feel it more appropriate, rather than adjusting their QE mechanism now in the immediate aftermath of the Italian referendum, wait for the dust to settle, if it does settle, wait until the January meeting rather, and then they take the decision. Now, if they were to do that, then the implication could well be, from a market perspective, that they are waiting for an opportunity to move towards a tapering type scenario. And if we were to see that, then I think that tail risk would imply that the euro would be rather stronger. So it would be, once again, rather a repeat of 2015. And that's been one of the stories that I've been really holding on to in the last 2 or 3 months, is the parallels with last year and this year, with the Fed in terms of September and December, markets getting long dollars and then unwinding them, but also seeing the euro having a little bit of a squeeze going into the end of the year.
But, Jeremy, could we actually see that playbook repeated again next year? Because, of course, the Italian referendum is not the only sort of risk event that is happening in Europe. We have several elections next year. Could that further constrain the ECB when it comes to tapering?
Absolutely, because clearly if we were to see the rise of populism extending in core Europe during the first half of next year, of course we have the Dutch referendum in mid-March on the 15th, and then rolling through into the 2 rounds of the French presidential election. If those were to see populist administrations, or at least populist leaderships, then I think that would potentially constrain the hands of the ECB, and the probability of tapering would be substantially reduced. Although at this juncture, I think our base case scenario would be that, yes, Marine Le Pen will get through to the second round of the French presidential election, which she will not win. And in the same way, Geert Wilders and the Freedom Party will do well, but will not be the governing party. So I think there are risks, evidently, and I think political risk will continue to be a strong story which will drive currency markets through calendar year 17. But it isn't our base case scenario that those events will be substantial enough to blow the ECB off course. But clearly the central bank will have to be mindful of those concerns.